So, hi everyone. Good evening. Welcome again with a very interesting session with our favorite guest for today. So, let me take the opportunity to introduce, although both Jiten sir and Nitin sir doesn't require any kind of introduction. They are very well known within the industry. But again, uh, Jiten sir has been investing in the market since 1993 and he is also an entrepreneur and a passionate long-term equity investor. So till 2002, he used to invest in the US markets. So from 2002 on, he started investing in the Indian equity market. And he's a co-founder at Aurum Capital along with Niteen Dharmawat sir, basically a premier research analyst firm. And we, majority of us who have joined today already know their style and they are value driven, cyclical and contrarian investing. And they always try to find out the companies or the opportunities when nobody is talking about them and they understand the cycles very well, be it the market cycles, business cycles, or economic cycles, right? And he's also both our guests appear on various media forums, be it like spaces, YouTube channels, TV interviews, and very renowned investing sessions organized by CFA Society and many other forums of repute. And apart from investing, he's also been a successful entrepreneur. He started his journey in mid 90s, wherein he co-founded an IT consulting and product company in the USA. Later, he successfully exited by selling it to a Nasdaq listed company at the peak of tech cycle. So we are talking about early 2000 times. So with that note, I hand it over to Jiten and Nitin sir. So just in case I miss anything on introduction, maybe you can correct or add to that. And then would appreciate, sir, around the topic, we can have a monologue and after that we can start with the Q&A and select question will also be taken from the audience, but mind it, no company specific questions. The idea is to have a holistic educational discussion wherein we broadly discuss the market and how they are looking at the market in their individual capacities. Over to you, sir.
Yeah, good evening, everyone. It's been quite a while since I come to a space. Most of the spaces I've been part of is with my favorite host, Prince. Uh, but just been a bit busy with travel and also couldn't join in the last few months. But uh, just to make things clear and a perspective is put, I want to basically say that this session is typically for value investors. Okay, so I think there will be a lot of takeaways for value investors. For others, I mean, if they want to learn value investing or if they want to have that bend of mind, maybe they can attend. That is what we practice, and that is what the all the perspectives which I will be talking about will be from a value investing perspective. So first, let's start with the common question: market क्या लगता है? So again, I say I have no short-term view. I don't predict any short-term levels or what is going to happen in the short term. I only react to what is happening. Okay. And a correction is happening. It's still a small correction, but the correction is happening, which is very healthy. And though it's painful, it's very much required. I mean, the market was on steroids. Even in the past phases, I think me and many others would have been saying that there are a lot of pockets of fraud. So I think this correction is very much required. And again, for long-term stability and for long-term growth, it is very healthy. Any correction, I believe, from a long-term perspective, one should use the opportunity to invest. any corrections or any sharp drawdown, because I remain extremely positive from the long-term angle of the markets. Uh, but at the same time, with what has been happening over the last couple of years, and especially in the last 1 year, uh, markets are still uncomfortable from overall perspective. There are large pockets of overvaluation. Quite a few of them are correcting. Uh, Others will. We will talk about some of those things subsequently. All the excesses which are happening will always get taken over time. Over time, I think what has gone up, uh, to euphoric levels will correct sooner or later. I will not hazard a guess when. Uh, at the same time, there are always, pockets of value in the market, though they are fewer now, but yes, there are pockets of value in the market. One just needs to dig a bit deep. Uh, Currently, most of the opportunities are only in ignored, contrarian, and sectors which are facing headwinds. Anything doing well is priced to perfection and beyond, and it offers very little margin of safety. So anything which is doing very good, one should be very careful at what price they are paying. The investable list becomes smaller during all this euphoria, which is what I'm seeing. I've never seen, I always always had like, 15, 20 stocks, which, I could buy at any point in time over the last so many years. And this is probably, one of the fewer times where I don't even have a list of 20 stocks where one can invest. So that's what the stage of the market is. Uh, Now, when I say, a lot of the markets is uninvestable. Now, by uninvestable, what does it mean? I mean, I'll put three criterias. One is management, one is balance sheet, and third is valuations. Okay. Now, these three things, can render companies uninvestable. Uninvestable means uninvestable for a value investor. Uh, and I will try to put some numbers and all that by various, basically when I say large pockets of the markets are uninvestable, I was talking about three criteria I am using. One is the management, one is the balance sheet, and the third one is from a valuation perspective. There are a lot of good companies which are doing well, but they are uninvestable because of the valuation they command, and so on. So what I'm trying to categorize amongst various market caps or various categories, a percentage, trying to put a percentage of uninvestable companies. Uh, so I would say, let's say SME sector, I think 95% of the companies are uninvestable. Uh, if one follows these three criteria as management, balance sheet, valuation, one or the other will be there. There are a lot of good companies there also, but even if the management is good, balance sheet is good, but then valuation is completely out of whack and so on. So uh, any one of them it doesn't satisfy, then it is out kind of. So I see that, like, 95% of the companies in the SME would fall in that category. Maybe in the micro and small cap, it would be like 80 to 90% companies. In the mid cap, maybe like 70%, and in the large cap, maybe 50% of the companies. So yes, from valuation perspective and from historic, valuation perspective, you find a lot of opportunities, far more opportunities in the large cap right now. Uh, and let me give you an example of some very good companies, okay, which are uninvestable. For example, so I'll be talking about some companies, name some companies, but these are just, it is not anything to do with, a buy sell on any of this. It is just to bring out some valuation perspectives and so on. So, for example, Bajaj Finance, let's say, at 9 price to book, it becomes uninvestable, which was the case 3 years back. Asian Paints at 100 P, again 3 years back, it was at 100 P, it becomes uninvestable. HUL at 90 P are just some of the examples of great companies which are uninvestable for me. Uh, so even in these great companies, if you invest at these kind of valuations, there are chances that for many years you will not, you know, uh, uh, get any returns, and that is what has happened in the three examples I've given you. Uh, so what I wanted to say basically. So by management, I mean that there should be no corporate governance issues. Balance sheet means for example, there will be companies where receivables are very high, or cash flow is very negative, or working capital is very stretched, and so on. So these are things which you look in balance sheet, which make a lot of companies uh, uninvestable, and that is what I see in a lot of all these companies just showing high growth are also seeing a huge ballooning of receivables. Cash flows are negative. I mean, it's not always that cash flows being negative for a year. Let's say it might be the case, but if it is consistent over, let's say, few years and all that, and then you have got to worry. So just the bottom line and the top line growth is not enough. You need to go a bit deeper into the balance sheet. So in the current stage, I am ready for a 30% fall in my PF. I mean, that is the worst I can see happening uh, to my portfolio, for example. Uh, and this has been there for the last, 1 year. 1 year back also, I was having a similar thing that, yes, my portfolio can fall 30%. Luckily, I didn't have any cash, and I still don't have any cash, any meaningful cash, just because I want to stay invested in this market. But calibration of your portfolio is important, which I have done. Like, maybe 25 to 30% of my portfolio currently would be in names which are relatively safe, which will hopefully fall far lesser. If my portfolio falls 30%, 25 to 30% of that would probably fall less than 10%. That's what I'm looking at, and that's what I think I have in my portfolio. Again, I can be wrong, but that's what uh, uh, I tend to think about my portfolio. Uh, anyway, I mean, if you're ready for a 30% fall, then a lot of anxiety goes away. And one thing you have to make sure that you have tennis balls in your portfolio and no eggs. I mean, that is what is important, because even if the portfolio falls 30%, do you have the stocks which will again rise because markets will again go up and so on. So that is very important to have in these kind of markets. Stocks.
I mean, obviously, the three pointers which Sir has highlighted, uh, all three should check for any company to pass through the criteria you guys follow. But again, in certain times, if specifically ask about the cyclicals, so there are certain companies who are available at such a level, or you can give some discount on these three parameters, which I believe management and balance sheet is something which cannot be compromised. But on the valuation front, do you believe some kind of leverage, or leeway can be given basis the opportunities you identify at times?
First of all, Prince, I am not at home. I am outside. I am holidaying, so I may have a poor connection. Uh, so, uh, First of all, let me clarify that. In case you are not able to hear me too, this would be the reason. Okay. Now, let me add to what Jiten said about SME companies. He said that almost 95 to 95% he said uh, uh, can have a valuation trouble. I would say that he is very liberal when he is saying so. Very, very liberal. I did one presentation in 2018. It was just post SME crash during that period. SME plus small cap companies crashed during that period. And I use one image I'll share after a couple of minutes. In that presentation, first slide was of Nawazuddin Siddiqui, and I still remember. And I was covering one company from SME after the crash. Okay, and I was just covering the business prospect of this company. But before that, I wanted to drive that point that how SME investors' life got changed. One was normal guy, second uh, picture in 2017, he was in suit boot because they made a lot of money. And third picture in 2018, how he would look like. So he was in lungi, and I said that he's still carrying lungi.
I think similar issue. Jiten sir, you are able to hear him?
No,
Hello.
I think I lost his. Yeah.
Yeah,
Okay.
he's back
Okay.
again. Yeah, yeah, we can
Now
hear
we
you
can
now.
hear.
Okay. I don't know where you lost me.
Lungi, Lungi.
But
We lost
what
you at Lungi.
okay. What I was saying is he was still carrying lungi, and some of the some of such things happen when major crash happens in these sectors which are going through significant euphoria. So, as an investment philosophy of ours, what we are very careful is about valuations. And what we are most worried about is in case we are invested in a company or sector, and if there is a correction and correction is there, then it impacts everyone, all sectors, all companies, everything will get impacted. For example, 2008, when the crash happened, SDFC was also down 60%. Okay, so all good, bad, everything will get impacted. But what we have to really see is these companies where we have invested, these sectors where we have invested, should have the power to bounce back. What example Jiten was highlighting about eggs and ball philosophy, that it should be able to come back once the correction is over, once the normalization sets in. Then those companies, those sectors should be able to recover, and our investment should not turn into permanent losses because we are not investing from 1 day, 2 day perspective, but from a longer term perspective in the businesses.
So sir, as we were discussing for now,
So
so are there any
Prince, if I can complete what I was saying, and then maybe we can go to question answer. Is that fine?
Yeah, yeah,
Yeah.
please, sir.
So, so basically what we are doing now, so the topic is investing in current time. Okay. So as I told, the way you can structure your portfolio, in current times, okay, by investing in companies which will, basically fall lesser and so on, at least a certain portion of your portfolio and not having any eggs in your portfolio. That is something which one can do. Now, in this period of time when, ideas are scarce, and so on. What should what investors like us do? So basically, what we are doing is we are doing a lot of groundwork. We are visiting factories. We are looking at companies, even smaller companies, SME companies also. Though said so many things about SME companies that majority of them are not investable, but still there are a handful of companies which obviously will do very, very well and will make a lot of wealth. There is one company which me and Nitin invested in. He talked about his presentation also on that company in 2017. It's a huge multi-bagger for us and so on. And there is one more company I invested in SME last year. But we are extremely selective. Now, what we are trying to do is, meeting the lot of companies. Going to their factories, visiting them, finding about, doing a lot of scuttlebutt, finding about their suppliers, vendors, how their products are, and so on. So a lot of work is going on, though they might be completely uninvestable at this point in time. What we are trying to do is prepare a list of companies where if there is a significant correction and if there is an opportunity, we will invest. But only if we have valuation comfort. Even if you do a lot of work on a company, if it doesn't come to your valuation range, we will let it go. It's fine. We learned something. It's not necessary that you put in so many hours or days or even months researching a company that you still have to invest in it. It is not necessary. If it is not having a margin of safety, you should skip it. And that's what we strongly believe in. One more point I want to make is, great companies invested at wrong time can have a huge impact on your portfolio. So I know a lot of people a few years back, 3, 4 years back, uh, they were saying we'll invest only in blue chips and, uh, companies like, Asian Paints, Bajaj Finance, Kotak, HUL, HFC, and so on. A lot of these companies over 3 years gave absolutely zero returns when the broader market did wonders. People have had huge run during this period, right? So the thing is that, anything, for example, Asian Paints was at 100 P. Its earnings has grown. It has come to 50 P now, right? So there has been a correction in the multiple, and 3 years you see zero returns. So many examples like that, even in the bluest of chips. So it is very, very important that you invest in companies at the right time. Whoever says that, active investing,
Better now, sir.
yeah, I can hear you.
Okay. I mean, you can continue, sir. I mean, people will keep on joining meanwhile. Yeah.
Yeah. So basically, I was saying that, there, active investing does require a timing element. Even if you invest in great companies, if you invest at wrong time, you have a huge opportunity cost loss. So that is something which one should definitely keep in mind. Uh, and if you just don't want to time it, SIP is the best alternative. Just do that. The, uh, the, that's the best way for most of the people. Uh, who want to shy away from running, or if they are, having behavioral issues, then are not the temperament to invest when market falls and will get excited only when, market goes up. For them, I think SIP is the best option. Uh, as again, I would say, though there has been some correction, but still there is a lot of euphoria. One should stay away from euphoria. Uh, Avoid big narrative stocks and sectors, defense, rail, etc. You've seen, some of the best stocks in that sector have also corrected 40%. And even after this 40% correction, I feel a lot of these stocks are still very, very expensive, not in a valuation zone which we would like. So these kind of corrections will happen in many other sectors and many other spaces also. So just be careful. Uh, uh, Another, I tweeted about a company, I don't want to name it, which recently, guided for 100% growth, okay, in the top line till 2030. Okay, it's a very small company, SME company, uh, and having around 80 crores of sales. Now they are guiding that they will grow 100% every year till 2030. Now somebody has got to tell them that, what they are aiming is to be a Colgate in 6 years. Now, how is that possible? I mean, it's extremely, the chances of that happening is absolutely very bleak. So always remember that management guidance always take with a pinch of salt, especially if there is no history. If there are, and again, all these companies which have a history will never give this kind of guidance. Uh, so just be very careful of managements who give extremely rosy guidances, especially ones who don't have a history, and also of anybody, any of the influencers who are, asking you to invest in these kind of companies and so on. I'm not saying that everything will be not correct or something, but at least be very, very skeptical. Uh, so with this, I will like to, end my monologue, and we can go for questions or.
Right, sir. So, and the question would be, of course, for both of you, so as to add to one's each other's point. So, Jiten sir, although you have touched upon in the monologue, do you see any structural changes happening in the market? And is it the right time from where we have to condition our expectations? Because in the last 3, 4 years, what we have seen has been exceptional, and going forward. The same quantum of return might not repeat. So,
Oh yeah, I'll be happy to get half the CAGR what I got in the last 4 years. I'll be more than happy to do that. I mean, so you can imagine, some of us have the kind of returns we made in the last 4 years, especially since if you were, let's say, invested in capital goods in 2020 or 2021 and so on, and many sectors, energy and so on, the kind of returns you made are humongous. Uh, I mean, I can't expect to make even half the returns in the next 4 years, is what I would say. So definitely one must moderate their return expectations, uh, and also look at reasonable expectations. Maybe I'll be happy with like next 4 years if I can make 15-20% a year. I'll be more than happy. Uh, so that is the kind of expectation I have from the markets and from myself.
So Nitin sir, we also see the narratives also go in cycles, right? So basis, although the view has been very well articulated by Jiten sir, and you also added some point, but again, basis narratives, how exactly like if we draw some parallel in the past, had been it the same, or we are something excelling more on the narratives, or it's always there? I mean, how you would like to view that?
See, I'm not too sure how deep or how big the correction would be. That's a futile exercise, It's a very difficult exercise to pinpoint that, and whether this correction will continue, we don't know. Market can, remain uh, uh, very bullish for a very long period of time, and we may lose upside also. So, as Jiten mentioned, that he is completely invested in the market, rightly so. So because he is not predicting the market, whether when he is sounding very cautious, he doesn't mean that he is very negative about the stocks he has invested or the market he is invested. So am I. So we are not negative in terms of the market from a very long term perspective, but we are very cautious about some of the sectors where we see froth is there, okay, where the narratives are built, where people are talked about super growth. So we are very cautious about it. For example, I'll draw a parallel because since you asked about parallel, look at IT industry in year 2000. There was lot of euphoria. If you were there in that time during 99, 2000, 2001, that period, people were talking about before 2000 uh, about year 2000 problem because there was some issue in the year because years were coded in 2 digit and they required 4 digit code. So that kind of work was there before that. And post that, a different nature of work came uh, in our country. And IT industries did, IT companies did extremely well, actually. Some of these companies did very well. But valuations were certainly not in favor in year 2000, 2001, built on those narratives. PEs were in excess of 100, 150, 200. Many of those companies did not survive. And the one which were better did survive, but the valuations that they were having year 2000, they came in 2010 or 2020 after the correction. So, the companies survived, but they did not make money for the investors. So there is no point in investing in those companies. And some of these things we see today also. There's a lot of euphoria in some of the sectors. We need to be careful. They can go continue to be crazy, remain crazy. I remember year 2000, Infosys was trading at around 2000, 2500, some of those levels, and within 6 months it was 18,000. You know, and I was thinking that it is very expensive, very expensive. It remained expensive and became very, very expensive. And people, those who are investing on those valuations, and if they continue to hold them, they have to hold it for next 10 years to get the same kind of return or to achieve the same valuation. The company did well. It generated huge profits, but valuation wise or the returns to the investors wise, it did not perform that well for those investors. It can happen if your stocks are again going through that similar kind of euphoria or the growth is built over there. We need to be very careful about that. Uh, so that is the point I would stress upon.
Yeah. So I would like to add something here. So very good example Nitin gave about the IT boom in 2099 2000. I had just returned to India at that time. Uh, And I mean, I saw all this crazy kind of valuations. I had sold my company just before the crash, actually. I had sold my company in 1999 and came back to India. And 2000 is when all this, Y2K boom happened and the dot-com bubble happened and all that. So some interesting facts. Wipro, for example, took, I think, 17 years to get back to the levels which it was, at 2000. Uh, After a 35x in profits. Profits went up 35x from the level of 2000 to 2017, but stock price came to the level of 2000 in 2017. I think in 18 years, Infosys also would have had similar or even a higher multiple of the earnings, number of times, maybe 40 times its profit grown, but and the stock only doubled in 18 years. So investing at the wrong time, I think, can be very, very disastrous. Even with the bluest of bluest chips. Another example, you can see 2007, 6, 7. I think infra companies, power companies. A lot of these companies have still not reached those prices. Uh, some obviously would have, but then it took 10 years, 15 years, and so on. So there are many, many examples like that. So uh, one needs to be extremely careful. And same thing is going to happen with a lot of the companies which are, in kind of euphoria currently. It might take even 10 years for them to, if after a crash happens and all that, it might take even 10 years for them to regain the price which they are putting it right now, if at all. So one needs to be extremely cautious about these things.
Right, sir. So on
So just to add to what Jiten is saying, whenever narratives are built, I become very fearful of those narratives. When people talk about excessive power requirement, you know, excessive requirements of transformers, so I'm sure that they are right, and those judgments are right, those stories are right, and they may prove to be right. Or maybe green companies they talk about, the requirements they talk about. I'm 100% sure that they must have done a lot of work to understand that. But when the narratives are repeated again and again, and they are translated already in some price movement in those, not some actually, but very significant price movement in those companies, uh, it makes me really skeptical about the returns that I may be getting from investing in those companies. Of course, there can be significant price movement, as I gave the example of in 6 months, it has actually went up by 8 or 9 times during that period. If you go to look at the chart in that period, so it can give significant return, and you can miss those return in case you are out because of the fear. But you are if you are coming at the peak of the cycle, you also carry the risk that your investment returns will not be coming back to you for next several years. So you need to be very, very careful when you are joining the party based on these narratives, these stories. So I become very, very careful in putting my fresh money whenever the stories are around. I would rather like to put my money in sectors where people are not going to touch it for next 2 3 years. I'm perfectly fine doing that.
right, sir. Sir, on the Q2 results are around the corner. So what are the expectations across the board, or if not that much wide, but at least the sectors to which you guys have exposure? So how is the anticipation on the result, and is there any interesting you are looking for as far as the upcoming results are concerned?
Yeah, I think results mostly will be in line, I think, for most of the companies. Uh, I don't see too many negative surprises in that. again, so a lot of the recent investment which I would have done or we would have done is basically will be in quaternary sectors where we are expecting that results might not be that great. For example, I think chemicals again, uh, uh, where we have done contra investing, I think results will still, I mean, they might be better than what they were before, but still far below than where they ought to be from a normalized perspective, and so on. So, but I think financials also results will be maybe mostly in line, uh, and so on. Cement again will not be that good, but then these are the times when nobody is looking at such stocks. These are the times to look for value. And that's the only thing which is, basically making sense from valuation and investing from a long-term perspective. So sectors I can specifically say where we uh, kind of like currently is, I think, a top sector which we like currently where we find a lot of value is financials. We do like cement. Again, from a contra perspective, paper which has gone through a mid-down cycle uh, is again something where valuations are in favor. Select energy stocks in the power and so on. Sugar, I think time is getting right, though one needs to be wary of select stocks where there could be, lower yields due to disease and all that. So there's groundwork you have to do for specific companies and so on. Uh, Select chemical companies still offer value. Some building material companies have gone through a tough time and I think over the next 2 years can do well. Real estate will continue to do well. So these are some of the sectors which where we are finding some investable ideas.
Nitin sir, you want to add something?
I know he covered everything. I think he talked about banking also. So both private as well as PSU banks. PSU banks also has some interesting opportunities available at good valuation. So these are the sectors we are bullish at, and we are more towards contrarian side within this space also. So if building material companies are not doing well for last 2 years, we'll be happy to hold them for next 2 3 years without significant returns. We have no problem in doing that. However, we see possibilities of some green shoots getting developed in those sectors. Then it will be very interesting to build position in those sectors.
So one key thing which we are kind of looking at is uh, before investing in a stock, does it fall into criteria where, yes, it can fall 30%, but does it have the potential to give us 100% return in the next 3 years? I'm not saying it is going to give that, but does it have the potential to do that? If anything which fills in that criteria, that is something which we kind of like currently. Uh, so there are opportunities like that even in this market. So that's what we are looking at,
Yes. So
especially from mid and small cap perspective. The
correct. So basically, the risk and reward has to be in favor before we invest. So that's why you would not see transformer companies in our list where we had significant investments some time ago. We had several recommendations in our service also from that sector. You would not see that. They may continue to do well, but we may not be comfortable with the valuations in those companies. So we may like to hold them, we may like to exit in some of those companies, but we would not like to, place new bets on that sector.
Yeah, absolutely. I mean, that is one sector which has worked like magic for us. Uh, and we still have investments in that, but we have taken a lot off the table. Uh, and I mean, there are some where we think that there is still more room. Not that it is not expensive. I have to agree that they are expensive, but they are not as expensive as maybe a lot others in the sector, and there is a possibility that these might catch up. And so Again, so you have strategies of exiting place that, if the cycle turns, you're ready to get out at maybe 10, 20% uh, level down from here also, that is fine. Again, different strategies, but it is a sector where we will
Right, sir.
not advise
Sir,
any
we
fresh
have
investment.
been, yes. Yeah, on the China easing thing and the movement in the metal stocks. So, do you see, this is going to last a little longer, or it's like a temporary thing happening? And I mean, how exactly you are viewing this?
So, I mean, to be honest, we don't have a view on it yet because it's just uh, too little a time where this event has happened and all that. Let's wait for things to pan out. Again, if we say something, it will be just guessing, which we don't want to. Uh, so metals, I think from a price perspective, not from a stock price perspective, from let's say iron ore perspective or from aluminum LME or this lot of these had gone to very low levels, uh, and we were actually quite interested to buy into stocks in there, but unfortunately stocks didn't correct, to the levels where we have a comfort that what if this continues for another 2 years, are these levels good to, invest in where you can sit for another 2 years? Those levels actually didn't come, to be honest, in the steel stocks, for example. Uh, so we kind of missed it because we are comfortable missing it, but uh, uh, the price has to be right. So that's what has happened with the metal sector for us. We continue to hold some aluminum companies and so on, which we still like.
Right, sir. And on the textile and oil and gas, these are the two sectors of chatter wherein people are talking that they are seeing some traction. So, any sense or do you see there is something
So
interesting or you,
yeah, so textile could be interesting, but at the same time, now what you have to see is, what part of textiles. I think cotton it could be a worry. I'm seeing that acreage in cotton has reduced this year, so cotton prices actually might be going up or have already gone up. So that can have an effect on these companies. So uh, I'll still be, I'll still wait on textiles. What was the other sector you talked about?
oil and gas, sir?
Yeah, so oil and gas, yes, we kind of like some exploration company which was at a very decent valuation. In fact, we recommended one recently where the dividend yield was still high, not participated, fairly, very, very decent valuations. So we kind of like that. Oil marketing companies, again, just it's been too volatile. Uh, Marketing margins might have gone up, but refining margins have gone down and so on. So we had exited and we have not currently got into anything on the OMC side.
So broadly, if we have to generalize, so would you say it is a stock pickers market strictly, or even sectors as a basket approach can also be played? As we were discussing, that valuations broadly are not in favor in majority of the places.
Yeah, so you can, I mean, it depends company to company, but there will always be certain companies which you look at from a standalone perspective, from a bottom-up perspective, or, what we look at is right now is any sectors where there are headwinds and so on. And from that top-down approach, then we navigate to which companies which we can look at and what are the, because different companies, let's take example of chemical sector. It's so vast. There are so many companies where, different cycles are playing out, and so on. There are companies which are doing well. There are some companies which are doing extremely poorly, and so on. So each, you can't just take a generic view for that. So, but overall chemical sector, for example, has been struggling for some time. So then you take a top-down view and then you drill down into each companies and then try to make, a basket approach. That's what we do. But at the same time, there will always be certain companies where you take a bottom-up approach because there could be some uniqueness or some unique things happening with that company. There is no one answer to it, to be honest.
And sir, specifically coming to the building materials, any certain pockets, obviously no company names required, but again, within the building materials, there are a number of subsectors or subsegments you can call. So anything in particular wherein you're looking at, or I mean, the whole basket is looking
No,
lucrative?
no, 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 no. You have to be selective and all that. So what we were looking at is probably, companies in the roofing segment have struggled for quite a while. And then you also look at, whether they have some diversified streams also, or some additional levers and so on. So that is the companies which we have looked at and invested. We even have a recommendation there. So that is one. There are, other building material companies, but we still don't find the valuations in favor. And so.
Sir, do you have any view on the tile segment? Basically, what the basis of this question is like the real estate structure has been, I mean, from last 2 years, 3 years, they were building these structures. Now, finally, it will drill down to finishing, right? So, from that point of view, I'm asking this question. So, do you see the whole basket of tile segment have anything
So I'll tell
even
you,
consider?
I like that segment, but I don't like the valuations of the companies which I want to invest in. So I'll sit out unless there is a significant correction.
Right, sir.
So our
And
style is
sir,
like that, even
where,
if we like a sector or anything, but if we don't like the valuations, we will stay out. We will not make a error of commission. We are fine making an error of omission, but we will not make an error of commission. That is our style.
so as we all are discussing, and there is no denying the fact that excesses are there within certain pockets or maybe broader market to say. So presently, like for majority of the, although it is very individual how one invests, but again, majority of the participants, if they had, I mean, what would be your advice as far as reviewing oneself's portfolio and taking corrective action? So how one should go about it broadly, if not, and also on the top of that, from last 2 3 years, we have seen that churning has become a fashion, right? So do you believe this is going to sustain?
Yeah, I think churning will continue, and uh, but churning is happening in sectors which are doing well. Okay, sectors which are not doing well are not coming in fancy. That is what is happening, is what I'm saying. So again, it's very difficult to kind of keep on guessing which sector next and so on because you can't react that fast. I mean, we are not like that. We whenever we invest at least 2 3 4 5 years, minimum. Again, different people have different styles and so on. Uh, so we are looking at sectors which are actually not coming into the churning industry. We like to be early, so we'll always be early into the sector. It will come in the limelight maybe down the line, but not when we are investing or anytime sooner than. Sometimes we get lucky, but most of the times it will do nothing for a while, uh, and that gives us time to do a lot more deeper work, add more patiently without any impact cost and all. That is what we like to be honest.
Right, sir. So
And
apart
regarding
from
your
well,
second part of the question was what should investors be wary of and how should they basically position. What I would say is you do a, a sanitation check on your portfolio. See if you are invested in uh, you know, stocks which are extremely overvalued and so on. Again, uh, uh, valuation is a relative term, but then there are a lot of guidelines and all that, which you can find on the net, or there is enough material on that. So anything, for example, in let's say in financials, anything which is like 7-8 price to book even if it is a great company, you could still struggle for quite a while and so on. Or there could be corrections and all that. Or if a stock, a good company, growing at 15-20% is at 100 P or something, that is excess and so on. So try to, basically be in companies. What what I do is for good companies or high growth companies. I would go at the max in these types of companies to not invest, but to hold on to companies which have a PEG of, let's say, 3. For example, company which is growing consistently for 15% or something, uh, can go up to 45 PE in these markets, right? So I might still hold on to it. I'll not even add a 30 PE, but if I have it, I might hold it to up to 45, for example, because this market is rewarding like that. But would I let it go? Would I, invest, or, would I be comfortable holding it at 75 PE when it is a PE of 5? No. So these are the, parameters which one has to develop for their style of investing. Uh, this thing for moderate growth companies, I will not have to pay more than a 1.5 PEG. And again, in these markets, to do that kind of investing is very difficult. But how many stocks you need in a year? If your churn is low, you need only 4 or 5 stocks in a year to invest. You don't need more than that, even if you are sufficiently diversified. So that's all you need in a year. You don't need to rush into every stock, board every bus which comes your way. You have to learn to say no in these markets.
And the follow-up question is basically on the closing remarks you made. You only need 4 or 5 investments, and I think that is the best approach. But what's happening these days, sir, is like people, what they are doing is they have access to 4 or 5 good advisories, and even the friend circle also. They get bombarded with ideas, be it from the close circle who is investing, and apart from that, as I just said, ki certain good advisories, right? Therein, there are two issues, as in, because one is like you mix 4 or 5 styles, because every RA has different style, right? So that is one aspect. And secondly, what happens is like when you jump to every other ideas being coming to you, in that case allocation takes a back seat. So what would be your advice on that front? Like if somebody is say I mean, would it be wise to cut down on the number of advisories, or maybe maximum limiting it to 2? Or because the more the ideas, the more the confusion, and if you invest in more stocks, so obviously the allocation would be divided accordingly. What would be your advice on that?
Yeah, I mean, I cannot advise on advisories, but if I were to take advice from somebody, let's say, why would I take advice of more than 2 people? At the most, two is the most I would take, because let's assume that they gave 15 to 20 stocks. I'll already be in 40 stocks, right? And that is also very high. Uh, so yeah, I mean, you don't need to do more than that. Uh, I'm well diversified, but still, even for me also, the Pareto principle works. Uh, 20 stocks of mine would be 80% of my portfolio, and the tail will consider. I mean, the rest will be the tail in the 20%, because there would be a lot of starter positions, tracking positions, and so on. So I might have a lot of stocks in my portfolio. The number would be higher than what most people do. But then you have to understand that a lot of it is for tracking purpose.
Right, sir. And although you have highlighted, but if you are to prioritize in order of top three contra bets, so which sector will take the lead? Which would be the top sector and followed by other two sectors?
So I think financials I like currently, building materials, uh, and third will be, you know, I would say paper.
Right. And also a very relevant question in the sense because the horizon which majority of our participants keep these days has reduced drastically. So if our view is 3+ years from here, so we need to be worrying about this growth or excessive being talked, or I mean there is a different understanding on that.
No, I didn't get the last part of your question. Can you repeat, please?
Yeah, so basically, if our horizon is 3+ years, so the valuations or the excessive we are talking about in the market. So do you believe that will be taken care of if our horizons
No, I mean, it depends on the stocks you are.
are?
Uh, it will definitely depend because as I said earlier, there will be stocks which will not regain their value even in 10 years. So, what are you going to do with those stocks? You should not be, if you have them, in your portfolio, they are running and galloping. You ride it, but just be wary of it. Have some mechanism in place where you are able to protect your gains and so on. Investing, to forget about it. I mean, we will not advise only. But if you have those stocks, then at least have some mechanisms in place where you can protect a majority of your profits. Uh, but but if you invest at the wrong time at the peak, and some of these companies, I'm very sure that you will not get your prices. That has happened with so many companies in the past also. We'll look at history. And we've given examples of companies like even Infosys and Wipro. Uh, Now, what better examples? Or last 3 years, you look at HDFC Bank, you look at Kotak Bank, you look at HUL, you look at Asian Paints. None of these, Bajaj Finance, none of these have given returns for 3 years. So what do you do? I mean, if you are uh, uh, and there is no guarantee that they will give returns in the next 3 years. So that is also there because the starting valuations were so high. So I mean, as I said, most of what I will be saying is from a value investor perspective. You have to make sure that you have value in your portfolio.
So one question from the audience is on the FMCG sector. So any thoughts around that, sir?
Uh, it's a sector which I think, I mean, if rural picks up, that sector might do well. But again, the valuations have still not been in favor for quite some time. I mean, to be honest, we are struggling to find ideas in that sector. Though even though we might like it, because what has happened is the valuations are still so high, and even the historic valuations have been high. But what if it corrects? What if uh, so many things happening in the field with so many of these biggies having private labels and all that. What if these valuations permanently correct? The last 5 years or 10-year median valuation do not come back, or they correct because of all these changings happening. It's complicated, and to be honest, we don't have answer to it. So, and if you are not comfortable with the valuations, you stay away.
And sir, on the private banks, although you like the space and the valuations are very in a sweet spot, but again, be it with the deposits or something structurally, you find there is no issues as such from the sector point of view.
No, so yes, there are short-term headwinds. We all know that, but I don't think there is structurally anything wrong. Uh, uh, there could be short-term challenges, uh, and you have to understand that if we are going to become, 5 and 10 trillion dollar economy, we will have lot of banks, lot of these current banks become much larger from where they are right now. and so on. So the key is to invest at the right time. So I will give some examples which we have given earlier. For example, HDFC Bank, Kotak Bank. Though we kind of like them, we actually waited for them, and only when they were at a very uh, decent valuation, we waited for 3 years for them, and only when they came at a decent valuation, we recommended them. So we believe that a lot of these banks will do well uh, uh, if you have a sufficiently long horizon. Uh, these short-term, blips and all that, if they correct a lot, could be buying opportunity.
Right, sir. And although we very less hear about the pharma space from you, but do you see there is something or maybe certain pockets within that which you are looking up to?
So actually, we do have recommendation in that space. We were luckily early in that this thing. We were invested in pharma companies, especially focusing on the domestic side, which has done well. Uh, and we had also looked at API companies and so on. Again, they've also done well. But at at the current juncture, we could be, we could be on our way out. We might be exiting in the future because we don't think valuations are attractive for us to invest. Holding, yes, but looking at possible exits in the future.
All right, so let me check if there are more questions from the audience. And recently, there are certain changes on the FNO side. Although we hardly talk about that, but structurally, will that have any impact on the market, sir?
Yes, short term it can and it should. Uh, but I'm very positive of those changes actually, to be honest. I think there was just too much of all this nonsense going around, with daily expiries, weekly expiries, and all that. And just too many retail people losing money in FNO. It's not healthy. I think the regulator has done a good job of trying to curb that. Uh, and I think it is positive for the markets, though there could be knee-jerk this thing. At the same time, you have to be wary of, uh, the companies which were beneficiaries of that. So I still think that, from the broking side and all that, there is a lot of excesses in companies there. So we do like the companies, but valuations are just not fit to invest for us. And hopefully, if they correct a lot, then it could be interesting for us.
Hello.
Right, sir. Yeah, okay.
Yeah, Jiten sir, Anand here. I have a couple of questions. Uh, uh, how is the fabric and yarn sector you're looking currently? It is still like cyclic weight for now?
Oh yeah, yeah, it is a cyclical sector, and I think I already talked about textiles.
Okay.
Currently we are kind of staying away, so not much of a view right now.
Okay. And when you said that you the currently finance sector is good, so are you looking for microfinance companies? I mean,
No,
how to will
no,
not
no,
not
no. That is something which we find it too cyclical, to be honest, and too much prone to disruptions and this thing. We've never been very comfortable with MFI, and I don't think we've ever recommended anything from the MFI side, to be honest. So that is one sector which
right.
we kind of don't like structurally, to be honest. Though if you get the cycle right, you can make a lot of money, but we find it too risky for us, so we always avoided that.
Yeah, Balaji, you can unmute and ask your question, please.
Hello, sir. Actually, of late, there are a lot of negative news coming on the NBFC sectors, right? NPAs rising. So how do you see opportunities in this sector? especially the MFIs, small finance banks? Thank you.
So MFIs, as I've already just answered in the previous question, we are not comfortable and we kind of would want to stay away from that sector. Uh, and now, small finance bank, you have to see what their portfolio is, right? If you know, MFI is very little. Like there is one bank which I like where the portion of MFI is only 15%, and that also is continuously reducing. And if that bank is doing well in all the other sectors, I think that is something which can be looked at, for example. But NBFCs also, what you have to see whom they are lending to. There will be housing finance companies which where there might not be much issues and so on. So the 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 what is the lending to whom they are lending is very, very important.
Right. I think more or less, sir, we have covered the question. Other questions are on the fancy sectors of the likes of data center and whatnot. I think that is outside the scope of the discussion with the renewables or. But again, anything more
No,
to it,
so
sir? I
yeah,
mean, on
I'll
the
tell you. I mean, for example, it's not that I'm negative on these sectors at all. I mean, I do love like data centers. I do like renewables. In fact, one of a large position I have is in a company which caters to renewables. And but you have to look at individual companies, see if you can find any pocket of value there. Uh, and it's becoming difficult to find pockets of value. That's what I'm trying to say. Uh, a lot of these sectors will do well. I'm not against those sectors. It's just, some of the companies are pricing in maybe next 5, 10 years kind of, numbers in the valuations currently. Now that is not very prudent from a value investor perspective, and that's why you stay away. So I'm not saying that these sectors are not good. They will do very well, but you have to be wary of what price you're paying.
totally agree on that. So Gaurav had sent request. I cannot see him. Okay, Gaurav, you can unmute and ask,
Yeah,
please.
thanks, Ben, for the opportunity. Thanks, Jiten, sir, for sharing your insights. Any views? There's not a stock specific question, but this is on housing finance in general. The way we have seen is that one of the biggest player has got merged with its subsidiary HDFC, and now there is actually this space is more vacant in the sense that a big player has gone away. We got a new IP also in the market, but do you think that this sector can be a major runner in future? Just not anything else stock specific, but I am seeing that market is consolidating in a very reverse manner. So just wanted to know your views on that.
No, no. So, I mean, there is a merger. So, player has not gone away. I mean, obviously, it's just merged, but the player is still there, obviously. And the need for homes in India is going to be there for a long time. Housing finance companies will do well. There is lot of scope, and so we do like companies from that space also. And a lot of banks are actually catering to that also. I mean, if you're not comfortable just with the housing finance, you can latch on to banks which have value and which have a substantial portion in housing finance and so on.
Yeah,
But it's a
because
sector which I think should do well.
sure. Thanks.
Thanks, Gaurav.
So, Prince, can we take
So
the
Jiten, sir,
next
yeah.
max
Uh,
three questions? I think.
yes,
Yeah.
yes. Let me see the comments. So there are repetitive questions coming in. So one is asking your view on solar segment of the renewables.
Extremely good. I mean, solar, I'm very, very positive about. Uh, but again, same as I mentioned earlier, valuation wise, a lot of it is not making sense.
So broadly, we can assume, sir, the three parameters which you initially highlighted, the valuation is the one which is mostly
Yeah,
getting crossed and keeping you away from these sectors,
yeah,
right?
yeah, absolutely. And, uh,
But coming to the
and
total
then
addressable market,
also
do you
also also balance sheet. Also, a lot of the smaller companies have balance sheet issues. I mean, if you dig deeper, though they are showing tremendous growth, there are problems in receivables, there are problems in working capital, and so on. Luckily, what is happening with a lot of these companies is they are able to raise money at these euphoric valuations because people are sitting with a blank check to fund QIPs and preference shares and all that. So some of these companies will still pull through, but then if they are not able to raise money or this thing, some of these companies will have survival issues.
right, sir? And sir, there is a lot of chatter about special situations and turnaround companies. So in this situation, do you believe that is not the right time to look at those companies, or it is very subjective depending upon what kind of opportunities or what kind of turnarounds are happening? One has to identify
Yeah,
on those basis.
yeah. So I mean, turnarounds are quite rare, to be honest. A lot of it is it. I mean, there's a difference between turnaround and there's a difference between business cycle. So again, a lot of it is business cycles. Genuine turnarounds are uh, quite rare. For example, CE Power was one example in the recent time, which was actually a turnaround, right? And of course, it was benefited uh, uh, by a change in cycle also. But then it was basically change of promoter and complete turnaround. So that is one good example. But that's quite rare.
So last two question, Ankit and Farshad. So Ankit, you go first and then Farshad.
Sure. Jitenji, because your investing style is a bit of finding value, wanted to know your views on the asset management companies like Nuvama or say Aditya Birla Capital, which are into, when a country grows, the financialization of savings increases a lot. Plus, they are available at, reasonable 15-20p valuations. So what's your take on this sector, please?
So again, I will not be able to talk on any individual companies. As a sector, we like this sector very much, and I mean that's all I can say. And if you find anything which is reasonably valued, I think it is a sector to be uh, invested in for a long time. But look at valuation. There are some, for example, wealth management companies that have seen valuations also. So again, you have to be company specific and look at valuations closely.
Farshad, you can.
Sure, sure. Thank you, Jiten sir, for your insights. Sorry, I joined a little late, so apologies if you already answered this question. Please feel free to say no. So my question, Jiten sir, I mean, your one of your core capabilities is, playing the market cycles. So just wanted to understand, your how do we identify whenever, a specific sector is, changing the cycle? Is it more around improving margins or the management guidance or government policy or demand supply equation? So just for someone like me who is a bit newbie in the market, that sector changing and, going from headwinds to tailwinds, that inflection point, what are some of the parameters that one need to look at? If you can take an example, that will be even better. But yeah, I would love to hear you from this.
Yeah, so I think you answered the question. Uh, I mean, the answer lied in your question itself. I think primary thing you have to look at is demand supply. Okay. Sector changing is, basically going in upcycle is when, you know, uh, demand starts, coming in equilibrium with the supply and then exceeding it. Then it will go into a huge upcycle. So that is the key thing to track. And I'll give you example. Uh, let's say till to 2020, 21, okay, from 2013, 14 onwards, let's look at the transformer sector, right? For 8 years, uh, the supply was so huge and the demand was just not there, right? So it went through a complete down cycle. Now, somewhere in 2021, 2020 end or something, and start of 2021 is when you could see some green shoots, uh, where you could see some demand coming back. Okay, and also a lot of supply going out. During these 8 years, a lot of supply went out of the system also because it was just not remunerative for a lot of people to run their factories making transformers. So a lot of the private players actually closed down and so on. So when demand came, uh, the supply destruction had also happened and demand also came. So that is when the cycle happened. And see what is happening right now. Even today, even after all this run up, these companies are doing very well. A lot of companies are actually having to say no to customers that they don't have any supply and they are booked for next 1 year and so on. So it's all basically demand supply.
Sure. Thank you, sir.
So, sir, surely last question. Let me take the leverage to ask that. On the caustic soda space, do you have any thoughts? I mean, obviously, company is not required, but again, broadly,
Yeah. So again, from a contra perspective, we are invested in a couple of companies in that sector. I think sooner or later things will change. We are seeing some uptick in prices, but I don't know when. But the thing is, what you have to look at is what can happen maybe 2 years down the line and so on. We believe that, I think demand is growing, supply had come. I think equilibrium will be reached somewhere in the next 2 years somewhere. And that is when prices will start going up. Prices might start going up earlier also. Uh, but I think the full, you know, uh, what do you say, benefits of investing in this will be realized over the next 2 years. Now you may want to wait to invest uh, till that inflection happens. But then what we have seen is, actually your prices of the stock start running much ahead than what, the demand supply equilibrium is reached and so on. So you have to be, the way things are going, you have to be a bit early. And that's what we are trying to do. Uh, and we do like a few stocks in that sector, to be honest.
so, sir, these are 2, 3 year cycles, or they can last longer than that also. I mean,
Uh, Again, no one can be sure, but looking at demand supply, I think over the next 2, 3 years, there will be, it will be far better than what it is currently.
great.
And then, then,
Thank you
then
so
what
much
happens?
for
What
taking.
happens is sometimes, some event happens where you can get benefited, or some event happens where, your estimation go completely wrong, where it takes far longer than. And I'll give you example of that. Chemicals, I think from last 2 years, people are thinking that yes, next 2 quarters it will turn around, but it has not happened. So sometimes the down cycle lasts longer also, and sometimes it starts far sooner than because let's say a supply disruption happens, one big company closes its plants in Europe or something like that can happen. You don't know. So those are unforeseen events. So something like that happens, then the whole thing which was going to happen in 2 years can happen in 6 months. Uh, so there is no exact science, that this is the time it will take. Sometimes it takes longer time than what you anticipate, and sometimes it takes shorter time.
So, key monitorables, if you want to highlight in this, sir, and we close after that.
Key monitorables in what?
I mean, from the caustic soda companies, apart, I mean,
Yeah,
pricing
so
or something. I
yeah,
mean,
so pricing you can see, but what you have to see is how's the offtake, any new capacity coming in, any capacity going out, uh, so these are the monitorables. Especially you have to track demand and supply closely. And
thank you.
also
Thank you so much, sir.
also be aware of what the industry is growing at. So some of the supply will be absorbed by the growth which happens into the sector. Okay, so that is how your demand supply equilibrium is reached. But if let's say capacity utilization of a sector is let's say only 55%, 60%, and let's say it is growing at 10%, then you know that it will take 3.5 years for demand supply to be in equilibrium. So that you have to guess from what is the anticipated growth and what is the current capacity utilization. And also you have to see how much supply is being added.
Right, sir. Really helpful. Thank you so much for taking out time. Really helpful, sir. And it's always a pleasure listening your thoughts. And majority of our participants get benefit from getting the right temperature check with your experience. Thank you. Thank you so much.
Thanks, Prince, and sorry to all because I think in the start there was a problem with the space. So I think Prince, you will basically join. I think it was in two spaces, so you'll probably edit and join it and put it as one,
Yeah,
right?
I'll manage, and sir,
Sure.
possibly I'll upload the recording as soon as possible.
Okay, okay. So I hope I have added value to you. Spent 1.5 hours today listening to me, and I just hope that I have added some value to you.